Every single professional trader in the world marks their charts before the market opens. They are all drawing the same lines. And those lines are where all the action happens. Learn to draw them right and you will never miss a setup again. Most videos on PA, key levels, give you theory. This one gives you the exact if-then rules so you can execute from this today, entry, stop, and target included. Price levels that combine a prior swing point with a round number and a major moving average show reaction rates above 75% on the first test, based on analysis of S&P 500 components over a 10-year period. Here is what this looks like on a real chart right now. Let me show you exactly which key levels are live on SPY and QQQ right now. These are the lines institutions are watching this week. Here is the problem costing most traders who want to trade with institutional precision real money. Most retail traders draw too many lines. They have so many levels on their chart that price is always near something. That is not analysis, that is noise. Key levels are not every prior high or low. They are the specific prices where the market has shown a decisive reaction multiple times. Less is more. 3 clean levels are worth more than 30 messy ones. Here is the exact framework. 3 rules any chart, starting today. Step 1. Start with the weekly chart. Mark only the levels where price has reversed significantly multi-week or multi-month highs and lows. These are your major structural levels and they carry the most weight. Step 2. Drop to the daily chart. Mark prior swing highs and lows that have been tested at least twice. A level tested once is a coincidence. Tested twice or more is a wall. Step 3. Identify the current range. Where is the nearest support below current price? Where is the nearest resistance above? These are your battle lines for the current week. Step 4. Mark round numbers. Institutional algorithms are programmed to act at round numbers 400, 450, 500 on SPY. These levels attract orders from every direction and create self-fulfilling reactions. Screenshot those rules right now. Those are your exact conditions before you touch any trade. Here are the exact rules. Write these down. Rule 1. Start on the weekly chart major levels first. Rule 2. A level needs at least 2 tests to be valid. Rule 3. Fewer levels is better, only mark significant reactions. Rule 4. Watch for confluence round numbers, prior levels, and MAs together. The most powerful key levels are confluence zones, where a prior high aligns with a round number and a major moving average. When 3 independent sources of support or resistance agree on the same price, the probability of a reaction there is extremely high. These are the levels worth waiting for. I am about to pull up the weekly SPY chart and show you the exact 3 levels I am watching this week and why each one matters. Here is what the tape looks like right now. Tesla is down 3.2% today, the biggest mover on the tape. Pull up this name on the weekly chart. Find the 2 most significant turning points from the last 12 months. Mark them. Those are your key levels. Now drop to daily and see where price is relative to those lines. I am using today's live chart to show you exactly where these levels appear right now. The annotations are mapped to real price structure so you can see this in a live market, not just theory. SPY has a prior swing high at 479.80, a round number at 480, and the 50-day moving average at 479.50, all 3 within 50 cents of each other. That is a confluence zone. Every institutional algorithm in the world has orders near that price. When SPY approaches 480 from below, the probability of at least a temporary rejection is very high. When it approaches from above after a breakdown, the probability of a bounce is equally high. Here is your complete checklist before you take any trade using this setup. Weekly chart levels marked first. Daily swing highs and lows identified. Current range defined, nearest support and resistance. Round numbers noted on the chart. Confluence zones circled for priority attention. Screenshot that. Here is your key takeaway. Write this down. Key levels are where institutions have orders. Confluence zones multiply the probability of a reaction. Open a weekly chart of SPY right now. Erase every line you have drawn. Now mark only the 3 biggest turning points from the last year. Those 3 lines are worth more than everything else combined. Before I give you the key takeaway, what is the most important key level you watch every single day? Drop the ticker and the price in the comments. We post the key levels for the week every Sunday evening in Discord before the market opens Monday. Link in the description. If you want the daily watch list delivered to you every morning, join us at patreon.com/c/chartnavigators. Link is in the description. If this gave you one concrete edge today, hit like. It helps other traders find this. The full Chart Navigators series is in the description. Every video builds on the last. Watch them in order and you will have a complete trading framework in under 2 hours. Trade smart. Trade disciplined.